Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 6, 2015. Here's a daily chart of the SPY, and what was interesting is the Greece saga continues, and the market, similar to last Monday, or last Sunday night, I should say, last night and today, the market opened weaker, and it was open kind of gap down last Sunday night, not last Sunday, but last night. And what I'm going to show you, because I thought what was fascinating was price traded. In fact, let me go to the hourly chart. Okay, bear with me. So where did price trade? Price traded right down to 2034 and a quarter. We had our line here at 2035. I had given you the 2035 number quite some time ago, and we traded right into that number and immediately reversed higher and worked our way back all day to break even, if you will. Earlier in the day, we pierced through break even, went positive, then we sold off again, and then we worked our way back up one more time, even through the close into the after hours session. So just for kicks, let me show you what happened today. Let's see if we got a normal retracement from the high. So last night the market goes down to 2034 and a quarter, and then we retrace, well, not quite the 618, but in between the 50% and 618, which is normal behavior. Okay, and then we reversed higher, and then one more time we came right back into the 50% retrace and reversed higher again. So not that we can read anything into that, and not that that tells us what's going to happen tomorrow, but I thought it's interesting nonetheless that the Fibonacci retracements continue to work time and time again. You don't exactly know where they're going to stop, and you don't know if they're going to work, but nevertheless they do work, and they consistently work. So what do we have? Let me go back to a daily chart, and let's review a couple of the things that we've had on the table for the last several days. So remember that we've had our trusty head and shoulders pattern, and if you remember from last week, we had three different markets or three different indices that were not all pointing to the same thing. We had the S&P cash index, we had the SPY, and we had the ES contract, which is the futures contract. And two out of the three were pointing, or not pointing, they had recaptured the neckline of the head and shoulders, but the S&P, which one didn't? Was it the spider? I think it was the spider did not, right? Yeah, the spider did not, and you'll see the spider finished much weaker today than the ES contract is trading now. And what that tells us is that the ES contract was actually up in after hours. It continued up through the close today, higher. Can't read anything into that because there's very light volume in the aftermarket session, but nevertheless, I thought it was interesting. But if we take a look at the S&P cash index and see where that is relative to our neckline, I don't have the neckline in here. Let's draw it in. Okay, here we go. Whoops. Bear with me. You know my chart does that all the time. Okay, so we're still below the neckline here, even though we popped back above it last week. And, you know, the fact that we went above it and back below it, I would suggest, because we never had a definitive all three indices, the SPY, the SPX, which is the cash index, and the ES, which is the futures, we never had all three above the neckline, so I was never convinced, as you know from Friday, that that was either off the table or it was certainly going to play out. So I'm a little bit skeptical one way or the other right now. So I'm not going to really hang my hat on the head and shoulders pattern at this point. I'm just skeptical of it, that it will or won't play out. I just don't know one way or the other. One way or the other. There was too much uncertainty in my mind by the fact that we had 2 out of 3. So there you have it. So what do we have for the rest of the week? Well, what I can tell you is that this week should mark a low in the market. Now, will that happen? What I can tell you is Can price trade lower this week? Yes, it can, of course. We all know that. It can trade lower at any point in time. However, this week should mark a low in the market, and it should produce the one more rally I've been telling you to expect before a much larger decline in the market. Now, we're starting to see evidence of cracks in the pavement, if you will, that other things are telling us that the market is starting to weaken. And we'll get to those when we get to them, and I'll explain a little bit more. But before we do, let's go to a couple of our other indicators that we like to look at. For example, let's look at the IWM. So the IWM finished higher on the day by 49 cents, and the spider did not. It didn't finish higher on the day. It was basically almost flat by the close, and then in the aftermarket session, it was up a little bit. So that's one of my tells, one of my indicators. I like the fact, for the bullish case, I like the fact that the IWM was stronger today than the SPY or the spider or the S&P 500. That's positive news. But it's not something we want to hang our hat on. It's just something of note, as I like to say. And remember, this upsloping trend line here was intact for a long time, since May. And when we broke this line, okay, that told us that prices wanted to go lower, and they are going lower. And now it's going to take a lot to recapture this line. I don't know that we actually will or can recapture this line, but we can certainly trade higher. And once we do, if we ever did get back into this line would act as very, very good resistance for the IWM. So that's just something of note. So let's get back to the SPY for a second. We'll just wrap up the spider and S&P and see where we are. I believe this week, based on my cycle work, I believe this week should mark a low in the market. And I know I've told you that before. In certain times I say that's a daily cycle low and all that stuff. And sometimes it works, but it only works for a day or two, meaning that we only trade higher for a day or two. And that's not abnormal on a daily chart, because it's a daily chart, right? It means it might only be good for 2, 3, 4, 5 days. It could certainly be longer, but nevertheless, when I have a daily cycle, it's a short-term cycle. So therefore, it's nothing that we can say, well, price should rally 5 or 6% from here because it's a daily cycle low. That's not the way it works. But this one is different, folks. This one is actually a weekly cycle that I've got calculated for this week. And we'll have to wait until the week closes. So we have to wait till Friday, and certainly the market could bottom, and maybe it did bottom this morning, and certainly trade higher, and by the time Friday comes, we could be a lot higher than we are now. I'm just giving you this for information because it's something to know. I have to tell you because I know about it, therefore I want to tell you everything I know. So I believe this week should mark a cycle low a weekly cycle low, pardon me. Now, what does that mean? Well, what that means is it would not be out of the question for us to get a 2, 3, 4 week rally off of a low like that. Now, that's different than a 2, 3, 4, 5 day rally. A 2, 3, 4, 5 week rally, and I don't know that it'll extend 5 weeks, but it could be 2 or 3 weeks for sure. And if it is 2 or 3 weeks, we may see price significantly higher than it is now. Will we make new highs? I don't know. I'm a little suspect now that we'll make new highs because we basically have somewhat of a broken chart. And if we stayed above this area here and we were making a weekly low, then I would say, sure, we can rally to new highs. But the fact that we came all the way down here in this area here to the 200 period moving average, 205.5, that gives me a little bit of pause as to whether or not we can actually trade to new highs. I'm a little suspect of that. In fact, I would err on the side of we're probably not going to make new highs, and the high of the year may be in already up here. We'll have to see. That's nothing we need to really know about right now. What we need to do is focus on what direction the probabilities say the market can trade. Now, I can't tell you a direction for tomorrow. I just don't have it. But what I can tell you is we should be carving out a weekly low this week. So, one more thing, which is, remember, if the head and shoulders pattern did play out, it's this area here, and I'll just draw it in for you on the chart. It's this area here that really should find support for the head and shoulders pattern. So if we did continue lower tomorrow or Wednesday or whatever it is, then you could expect this area to be very, very good chart support. And this would definitely be a buy area. And this would most likely support the case that the weekly bottom would be in. So that's something to hang our hat on at least. Okay, let's go over to another market. Let's go over to gold. Gold's interesting, okay? See what's happening in gold. We traded lower. We came into our 1155. We tried to rally today a couple of times. Okay, let's go to the intraday. I'll go to the hourly chart, and you can see we rallied up earlier, okay, right into the 1174. We sold off. We tried it again, came up short, and sold off again. Now, what I would say is, if we're able to recapture the 1174 on an hourly closing basis and certainly on a daily closing basis, and that's nothing different than I've told you before, then higher prices should be coming. And how high is the question? How high is, in my book, I've got it at 1185. So if we can trade above 1174, close above there, then I think the market has enough momentum on the upside to take it to 1185. That's not a huge rally. It's not a huge number, but I'm giving you what I've got, and that's what I see. If, in fact, the market begins to close hourly above that level, now that's a different picture. Then I would say, at least for the interim, then this would mark a short-term bottom in the gold market. But we've got to see more. We've got to let the market tell us what to do. We've got to see the market show more evidence that a low is in. One day doesn't make a trend. One day doesn't make a reversal in the market, in my book, not in gold at this point in time. It's been too weak. It's been too volatile. And we certainly have to see it close above 1174 before we even consider higher prices. So nothing's really changed on the gold front. But nevertheless, you can see how, just go back to the hourly chart again. You can see that gold, it seems to want to go higher. It seems to be somewhat bullish. It seems to have a bid underneath the market, only it just can't get going above this red line. And that's the reason this red line was in, is because it's an extremely important number. And it stayed that way for quite some time. However, if we can close above it, we could be in business. Okay, let's go over to the oil market. Boy, did oil take a beating today, or what? First, let's go to the daily chart. Bear with me. Okay. So you can see that, remember, I said that the purple line here and the green line should be good support. And they were support. The purple line was good support for 2 days up here at the 56 and change area, almost 57. And now, remember, I had a target of 56. And boy, the oil cut through that target like a hot knife through butter. And it did it on... It did it overnight. I guess it was the, bear with me. Let's see when it started down. On the 3rd, and then it opened last night. It gapped down and kept going. So quite the sell-off in oil. So what do we do with it is the question, right? I've certainly didn't expect to see 52.50. I thought we would find support at 56, but that's what makes markets, right? You Can't be right every time, but that's why there was no trade in oil. Remember I told you we have to let the oil market show us a pattern developing to tell us it's a bullish pattern or something else to tell us it wants to go lower. And what happened was it didn't show us anything and price just went lower. So we did come in and find some support in this area here where you had a lot of chart support, and that's not surprising. That's actually the way it works. Let's take this target off the chart because that didn't work. Okay. So, by the way, when my numbers don't pan out like that, there's other numbers below that, and I didn't even give you the number below that because I didn't think it would get there, and it was so far away. But the number below that was kind of where we are now. It was 52.75, and we're even below that number. So I'm going to put it in just so we can use it as a guide. And nevertheless, we're below that now. So, we're not going to do anything with the oil market because just like up here, we have to let the oil market show us something, show us a pattern, show us a bullish pattern, show us a bearish pattern, show us a reversal bar, show us an intraday reversal, show us a high volume reversal. This could be the end of a move, and I'll explain why. A, you're into chart support. Okay, that's number one. You're into basically my next number, which I didn't give you. I didn't just make this up. That was the next number. I'd never thought it would get there, at least not from Friday. And but this was the highest volume day in quite some time. And what you'll notice is when the markets move down, for example, like this, on high volume, that can be considered exhaustion. And a lot of times the largest move comes at the end of a move, okay? So for example, this is not a great example, but it's a good example. We'll go back to the left side of the chart, and you see these three days here, these 3 bars up move here into what was chart resistance, okay? But you'll see that it was a large candle, and it was the end of a move. Not quite the same as this one, but a lot of times a larger candle will signify the end of a move, whether it's up or down. And it's nothing that we can trade against. It's nothing to hang our hat on for now, but it's something of note. It's something we want to keep in the back of our mind. And when we start to see, we have to see the market tell us it wants to reverse. So what would we look for tomorrow, for example? And this applies to any market, not just oil. It could be any chart. So this is one of those chart lessons. We're looking for maybe a flush down in the morning, maybe make a low, maybe finish on the high of the day, maybe finish with a doji candle, one of those like this, but on the flip side, another high volume reversal day. Maybe we even have an engulfing candle that takes out at least 3/4 of this candle today. And that would signify that maybe a low is in place. But until we see some type of evidence, there's no trade. It's basically a guess if you're trying to trade oil from here. You're just guessing one way or the other, and we don't do that. We trade based on probabilities, and right now we don't have the probabilities in our favor, so we'll leave it alone. Let's go over to the bond market. Big move in the bond market today. This is the TLT if the chart would ever decide to come up. Here we go. Okay, so where did we go? We came into this low again last week, and now we traded right into the 118.50 again and got rejected. So you see how now we're in this channel. Okay, the channel is basically the underside of these lows here and these lows here, and now we're just trading in the channel. And the question is, which way are we going to go? Are we going to break out to the upside of the channel, or are we going to go back to the downside of the channel? I'll give you my vote. It's very simple. We're not going to spend a lot of time on the bond market tonight because just like other markets where I can see a cycle that should be culminating, right now there's a daily cycle top in the bond market which should signify lower prices, which tells me we want to trade back towards at least the lower end of the channel. Okay, so that's what I see. There's nothing else to really discuss. I do not see higher prices in the bond market tomorrow. I see lower prices in the bond market. Well, whether it's tomorrow or the following day, I certainly see lower prices coming based on the fact that we should have a daily cycle top. So there's really not much else to discuss. That's the whole story. If we just want to take a look at the yield chart, we can see that price came significantly down here and we broke the upsloping trend line. So what does that tell you? Well, that would normally tell me that yields want to move lower and bond prices want to move higher. So that's evidence that takes away part of the case that I just told you about a daily cycle top in bonds. However, there's nothing to say that we A, can't recapture this trend line, or B, rally up into this trend line again tomorrow, which would push bond prices lower. But you have to look at all these things, because when we see things conflict, it keeps the trade in the back pocket, or it keeps the money in the back pocket. And when we see further evidence to support the case, like, for example, of a daily cycle top, then I would say, well, there's more likely scenario, might take a trade based on that. But right now, I don't see the evidence, so I would leave it alone. And I'm just telling you that there's a higher probability that bond prices trade lower than higher over the next couple to 3 days or so. So that's what I see in the bond market. Let's go to the dollar. Okay, dollar didn't do much today. I remember from last week, I told you that the upside target for the dollar was 97.75, and we really didn't get up there as fast as I thought we would. However, one of the reasons is because we're still inside of this big candle here. So the top of this candle, or the high, is 96.69, and we never closed above that level. So therefore, as long as we stay inside of this level here, price is going to want to move either lower or sideways. Until we close above this candle, there's really little chance that we can get up there. But once price does, if price does close above this candle here, then I think 97.75 is a good number. It's a good target, and I think we would trade there. I don't have a direction on the dollar one way or the other right now, so we're just going to watch the market and see if we can see a pattern develop to tell us which way or direction it wants to go. But right now, we don't have a pattern. We don't have anything telling us it's going one way or the other. So when that happens, we just don't do anything. We look for a different market or stock or whatever to trade. So what we did was the stock market, and I know I spent a lot of time on the stock market today. We did the bond market, we did the gold market, we did the oil market, we did the dollar. How about natural gas? Let's take a look at natural gas. Natural gas had a pretty solid down day. And remember, I was telling you this pattern was bullish, okay? But as long as we stayed above the low of this candle here at 274, it remains bullish. Where did we close today? 276. So therefore, nothing's changed other than we had lower prices, but the market is still in a bullish position. Now you're below the moving averages and you're towards the bottom end of this area or channel here. And you can consider this somewhat of a channel over here, and I'll just draw that in. This is a channel for sure. So you're at the lower end of the channel, and so there's a couple of things to do. You can do nothing, or you can take a trade on the long side if you're a natural gas trader, because you know where you're wrong. Any daily close below the low of this candle at 274, and you're out. You're wrong. I'm wrong. So, or it's wrong, or the market's wrong, the chart's wrong. So when you get to the bottom end of a channel, most people would get nervous because price is moving lower. But when you get to the bottom end of a channel and you're inside of a big green candle like this, and as long as price stays above the low of this candle, then it's still in the bullish position. So it actually creates a low risk, higher reward trade, even though you're below the moving averages and all that. But nevertheless, on a low risk, higher reward basis, you can take a trade here, and as long as and I wouldn't use the daily close because the natural gas market can move a lot on you very, very quickly. So what I would say is hourly closes below the low of this candle here, and I would move out of the trade. And that's the way, if I was going to trade natural gas, that's the way I would trade natural gas. So with that said, folks, I think I'm going to leave it there tonight, and we'll see how the market trades out tomorrow. I'm David Frost, My Strategic Forecast. Thanks for tuning in, folks. Another episode of Common Sense Market Analysis.